Welcome back to Investing Talk podcast. We're the place where we sift through that big pile of financial sources, articles, research, all our notes, and pull out the most important bits of knowledge for you. Our goal is always to give you that shortcut to being really well informed, maybe with a few surprising facts thrown in there too. Today, we are looking into a question that I know is on a lot of your minds. Is Nebius Group a good buy right now? We've got a stack of recent analyses, market data, the latest news, everything we need to really explore this one. And hey, before we get started on Nebius Group, if you find these analyses valuable, please do think about subscribing, liking, maybe leave us a comment. It genuinely helps us reach more people like you. And if you feel like supporting the show a bit more, you could consider buying us a coffee. The link's right there in the show notes. Oh, and definitely let us know in the comments if there's a specific company or even a broader topic you'd like us to look into next time. We really do look at those suggestions. Okay, so let's get into it. Nebius Group, ticker NBIS. For someone who's wondering about investing, maybe looking for an entry point, what's the absolute essential thing we need to understand about them?
Well, what's really compelling, I think, is Nebius Group's position. They're right at the absolute center of AI infrastructure in the cloud sector. And they're not just, offering basic services like a lot of companies. They've actually built out a whole full stack infrastructure,
Stack,
meaning GPU clusters, their own cloud platforms,
Yeah.
the whole setup. And they're operating this across Europe, North America, and Israel. So this puts them right inside the engine driving AI, especially generative AI innovation. They're foundational.
Okay, so they're not just participating in the trend, they're kind of enabling it, building the tools. That sounds, well, incredibly relevant right now with all the AI buzz. But what about the money side? Do the financials actually back up that strong market position? Are the numbers as good as the story?
Oh, absolutely. The sources we looked at consistently point to a really substantial growth in both revenue and earnings. Their trailing 12 months revenue, the TTM figure, hit $249.3 million. And get this, net income was $243.5 million over the same period.
Wait, nearly the same. The net income is almost identical to the revenue.
Almost. Which brings us to the margins. This is where it gets kind of wild.
Yeah.
Gross margins at 53.7%. That's solid. But the net profit margin, 76.3%.
Well, 76% net, that's exceptional.
It really is. It points to just remarkable operational efficiency. They're making nearly 76 cents profit on every dollar of revenue.
Yeah.
That's quite something in this space.
Wow. Okay. And I'm seeing here their Q2 2025 earnings per share was $2.11. That's a huge turnaround from the loss they posted the year before. Plus, they raised their full year guidance for 2025 earnings.
Exactly.
Sounds incredibly bullish, doesn't it? Management must be feeling pretty confident. What caused such a big swing from loss to profit? Was it just demand?
It seems to be primarily a surge in demand for their specialized AI infrastructure.
Yeah.
That combined with their efficient, scalable cloud model. So yeah, it points to really strong recent performance and, like you said, a clear signal of confidence for management about future earnings. For overall financial health looks solid too. Debt to equity is only 26.1%, which is quite manageable.
Okay. Low debt.
Yeah, especially for a growth company. And while we didn't see super detailed operating cash flow numbers in all sources, those incredibly high margins and positive net earnings, they strongly suggest robust cash generation is happening internally. It gives them a solid foundation.
Okay, so strong growth, amazing margins, manageable debt, raised guidance. It sounds almost too good to be true, but I remember seeing a note of caution sort of threaded through the analysis, even with all this good news. What's the catch? What are we missing?
That's the key question for looking ahead, isn't it?
Yeah.
Analysts are pointing out that, yes, margins are fantastic now, but there are intensifying pressures. Think regulatory pressures and also cost pressures. These could start to chip away at those impressive margins.
Regulatory how? Like data privacy.
Exactly. Data privacy, AI ethics rules, maybe even energy usage regulations for data centers, especially in Europe where they're big. These could add significant compliance costs. And on the cost side, demand for the powerful GPUs they need is pushing prices up. Maintaining that tech edge requires huge ongoing capital spending. So if those pressures really ramp up, sustaining a 76% net margin long term, that becomes, well, a real challenge. It impacts the durability picture.
Right, durability. Okay, that brings us to valuation, which is where things seem to get, well, complicated. The fundamentals look great, but the price tag, what are the metrics telling us there?
Yeah, this is crucial for any investment decision, right? Nebius Group trades at a very high PE ratio. Price to earnings is 89.88 on a trailing 12-month basis, and the price of sales, PS, is 68.6.
And how does that compare to others in the AI or cloud space? Significantly higher. Typical PE ratios for high-growth peers might be, say, 40 to 60. and PS more like 10 to 20. So Nebius is trading at a massive premium. It strongly suggests overvaluation compared to the sector. Simply Walston actually gave it a 0 out of 6 for value. Call it straight up overvalued.
0 out of 6. Ouch. So even with that amazing growth and efficiency, the market price seems to have already factored all that in, and maybe then some. Like there's maybe not much upside left from here. And I see it doesn't pay dividend either, so there's no income to kind of offset that high price while you wait.
Precisely. The general consensus we found is that the stock is just plain expensive relative to its current numbers and even future projections. And that leads directly into the risks. That super high valuation means there's basically no margin for error. If earnings miss expectations even slightly, or if some negative surprise pops up, a new competitor, a regulatory hit, the stock could correct sharply. The market's priced it for perfection. Okay, so valuation is risk number one, a big one. What about those other risks you touched on? Can you give a bit more detail on the regulatory or CapEx issues?
Sure. The regulatory scrutiny is definitely a big one, especially operating across Europe, North America, Israel. Different rules everywhere.
What?
Think about potential data sovereignty laws requiring data stay in certain regions. That adds complexity, adds cost. And the whole AI ethics conversation is heating up. That could mean stricter compliance, more audits, more investment needed just to meet regulations. For European tech firms especially, like Nebius, that landscape can change really fast. And then there's CapEx, capital expenditure. Running those GPU clusters, expanding that infrastructure, it costs a fortune. The price of advanced GPUs keeps climbing, and staying ahead technologically means constantly buying the newest, best stuff.
Right, it's an arms race.
It really is. Yeah. And while margins are great now, if those CapEx needs grow faster than revenue or component costs spike, those amazing profits could shrink. Plus, they're heavily reliant on the whole AI and cloud sector continuing its explosive growth and on them keeping their specific tech edge. Yeah. Competition is fierce. The giants are in this space too. Okay, so strong company, but sky-high price and some pretty significant lurking risks. How is the actual market, the stock chart, reflecting all this? Let's look at the technicals and sentiment. What's the price action been like? Well, the price action has been dramatic. It's currently trading, somewhere in the $67 to $72 range, but the 52-week range tells the story. Low of $14.09, high of $75.96.
Wow, what a run.
Incredible run. Very high year-to-date momentum. It hit new all-time highs recently. Technically, the trend looks bullish across all time frames, short, mid, long term. Price is way above its moving averages. Classic strength signal. Momentum indicators like the Mackie there, they're all positive. Just persistent buying pressure.
So the chart looks like a rocket ship, basically. Clear upward trend. But is there anything in those technicals suggesting maybe it's gone up too far too fast? Any warning signs it might be getting overextended?
There is one signal flashing caution. Yeah. The Williams per SAR indicator is currently at negative 16.7. Readings near zero on that indicator often suggest a stock is potentially overbought.
Overbought, meaning?
Meaning it's moved up very rapidly and might be due for a breather, maybe a small pullback as traders take profits. Doesn't guarantee a drop, but it's a sign of short-term exhaustion. And volatility is moderately high too. Beta is 1.1. So it tends to swing a bit more than the overall market. Strong momentum, yes, but it comes with bigger price moves.
Got it. Strong trend, but maybe getting a bit frothy short-term and it moves around a lot. What about sentiment? Are the professional analysts seeing the same thing as, say, folks chatting on social media? Is everyone bullish?
That's where it gets really interesting, actually. There's a disconnect. The analyst consensus is officially a strong buy. All 4 analysts covering it have that rating. But, and this is a really key point, their average 12-month price target is $67.50.
Wait, $67.50. That's below where it's trading now?
Exactly. It's below the current price range.
Okay.
So while they seem to like the company long-term, their targets imply they expect the price to basically go nowhere or even pull back slightly over the next year from these levels. Meanwhile, you look at social media, community forums. Sentiment there is overwhelmingly bullish. Very excited, likely driven by those recent big earnings numbers and just the general AI hype.
That is a disconnect. Analysts saying buy, but their price targets say don't expect much soon, while the crowd is super optimistic. Okay, given all that complexity, great company, huge price, risks, mixed signals, what should we be watching for? What could really move this stock short-term and long-term?
Short-term, definitely keep an eye out for their next earnings report, projected for later in 2025. Given the valuation, any beat or miss could cause a big swing. Also, any news on new products, AI platform updates that could spark interest, and critically, any real news on those regulatory issues or capital spending plans, good or bad news there, could hit the stock hard.
Makes sense. And for someone thinking longer term, maybe holding for several years, what are the big drivers or threats then?
Long-term, value will likely come from them successfully expanding. Can they move into more AI areas beyond just generative, like predictive analytics, autonomous systems? How well can they scale globally? Can they land bigger enterprise clients? That's key. New major partnerships would also be a big plus. On the threat side, major shifts in tech or AI regulation globally are a risk. Or big M&A activity, maybe they buy someone, maybe they get bought. That would change everything.
Okay, so let's try to wrap this all up. We've got the amazing fundamentals, the eye-watering valuation, the strong momentum but overbought signals, the analyst divergence. What's the bottom line for someone listening right now asking, is Nebius Group a good time to buy?
Well, putting it all together, our analysis lands Nebius Group at about a 6.5 out of 10 overall rating. You have to acknowledge the strong fundamentals. Excellent position in AI cloud, fantastic margins, powerful recent growth. It's a really exciting company, no doubt. However, and it's a big however, the valuation is just extremely rich. The current price seems to bake in absolute perfection for the future, leaving almost no safety net. And while analysts are bullish overall, the price targets suggest very limited upside from here in the near term. Plus, those risks around regulation and spending are real and seem to be growing.
So it depends heavily on the investor then. What does this mean practically for different types of investors listening?
Exactly. For, say, a short-term trader who's good with volatility and technicals, it might look attractive. The trend is up, momentum is there, but you need to watch those overbought signals like a hawk and manage risk tightly. But for a long-term investor, I'd say caution is definitely advised at these price levels. It's a company with fantastic potential, yes, but the current price just seems too high for a comfortable entry. You might be better off keeping it on your watch list, maybe waiting for a significant market pullback, or at least until there's more clarity on how those margin pressures or regulatory issues are going to play out.
It really sounds like one of those classic cases. Amazing potential, potentially revolutionary company, but maybe the price has gotten way ahead of the story for now. Demands patience, maybe. And it makes you think, doesn't it? How much future potential is too much to pay for today? Even in a hot sector like AI, that's something to really mull over for any investment. Well, thank you for joining us for this exploration of Nebius Group. Until next time, keep learning, keep asking questions, and stay well informed.